Stocks are lower in early trading, although some of the tech stocks are moving higher as the headlines are dominated, of course, by the trade war emerging between China and the U.S. It's now on in a big way, with huge tariff barriers being thrown up by both countries. Our next guest, however, is finding opportunity in these down markets. She says now is the right time to buy at lower valuations. Let's bring in Phoebe Venable, President and Chief Executive Officer at Capwealth. Phoebe, thank you a great deal for joining us. You say you are buying in this market. Tell us what gives you the conviction to go out there with client money and buy right now.
Well, even though the market is, there's a lot of uncertainty there and things can go lower, this week we have been buyers. We are very value-based in our approach to investing and allocating capital. And we have seen a lot of companies where we have high conviction. Their valuations have come down because their prices have obviously come down. And we have felt like this week has presented some opportunities for some good entry points. We have bought some companies that we didn't own before that we wanted to own, but the valuation was just too high. One of the tenets for us is that valuation always matters, and so if you overpay when you go into a position, you're wrong until you're right. And while the prices could get cheaper and valuations could get even more attractive, we found this to be a good week to start towing in.
You call this a stock picker's market, so you're not looking so much at sectors. You're searching for individual stocks that you have wanted to own and are now cheaper than they were before.
That is true. Instead of taking a top-down approach, we have been looking for specific names where the valuation has become attractive and not focusing specifically on sectors. We're finding valuations across all sectors.
What are some of the buys you've made recently?
This week we've bought Constellation Energy. That's one of those names that we wanted to own, but the valuation was just too stretched for us before this turn, and we find that one to be attractive. Today we're taking in a little bit more. We already own UPS, but we're adding a little bit to UPS. We've just been looking through client portfolios and reallocating it from into strength and into valuations. For our clients, we're always focused on the long term, and we believe that the noise that's in the market will get resolved, and after we get past that, we'll be able to look back and see some of these valuations that we were able to grab as being a really good, solid entry point.
Do you think markets broadly will be higher by the end of this year than they began it? Will the S&P 500 finish in positive territory this year?
Our base case is that, yes, we'll finish positive. We hope that Trump and all of the negotiations around the tariffs, that this is all resolved in the short term. And then when the uncertainty comes out and we have known information, that companies can start giving us better guidance. We saw that with Delta this morning. Everything is so uncertain. They don't want to provide guidance for the rest of the year. We're hearing the same thing coming from Walmart this morning. Once we get past this, if Trump can get this done, maybe by the end of Q2, then that gives us optimism for how we could end the year. But we definitely need some resolution on the uncertainty around tariffs and the potential for a trade war.
We are just at the beginning, or very nearly at the beginning of earnings season. The big banks will kick it off, including JP Chase. Jamie Dimon always has lots to say about the U.S. and global economy. He no doubt will have lots to say about the current environment. What kind of things will you be listening for as corporate chief executive officers and their colleagues at the upper echelons of management at big U.S. companies as they speak to investors and analysts about their companies and this environment?
Well, we're anxious to hear the companies report and talk to us about how they believe that tariffs will potentially impact their earnings. I do believe that investors are going to disregard whatever they are saying about Q1. Q1's earnings are probably irrelevant at this point. It's all about what's happening on a going forward basis and how will all of the tariffs and tax policy changes impact their bottom line, their ability to maintain their earnings, and to also give us some guidance so that we understand what they're expecting going forward. But I expect to hear most CFOs and CEOs that are talking to be very cautious, just as we heard this morning from Delta.
Do you advise clients not to reduce their equity exposure at this point? Would you be telling them this is the wrong time to reduce stock market exposure?
Absolutely. This is not the time for a client that where we've been working on their long-term goals and built a portfolio to solve for their long-term goals to be changing. This is not a time to knee-jerk and rebalance your portfolio from an asset allocation perspective. We do believe that reallocating inside your equity portfolio is a good idea at this point in time. But if nothing has changed on an investor's goals and objectives over the long term, then this is not the time to be making asset allocation shifts.
Phoebe, thank you so much for this conversation. Phoebe Venable is President and Chief Executive Officer at Capwealth.